Welcome to another S&P 500 analysis. Today is May 2nd, 2021. Last week, we saw the S&P 500 continue to make new high, and so did the NASDAQ. But something is different this time around. It appears the bear has been woken. In this video, we'll take a look at the price action of the S&P 500, the NASDAQ, and the other major market indexes and see what is different this time. And we'll also take a look at the sentiment and the market internal to get a gauge on the strength of the market. Stay tuned. Before I begin, I'd like to thank everyone that extended well wishes for me on a quick recovery from the side effect I was experiencing from the shingles vaccine. It was kind of weird. I did not experience any side effect from the COVID-19 vaccine, nor the first dose of the shingles vaccine. But this second dose of shingles vaccine hit me hard, and I was feeling tired, headache, and chill for 3 days. So right now, I'm pretty much back to close to 100%. So let's talk market. And I think the market might be getting a chill pretty soon. So let me tell you why I think that. Let's start with this weekly chart here. As you can see from this weekly chart, last week we saw a shooting star type of candle. It finished the week pretty much unchanged. It was up 1 point, but it also made a new intraday high with this shooting star type of price action. Although the price is still above this 10-week and the 40-week moving average, and also it is still continuing this one-time framing up. But due to this bearish shooting star candle and the battle between the bulls and the bear for the last 2 weeks, I would have to put some credence and give some credence to the bear for retaking the control of this market after a strong week of earning report from those FANG stocks such as Apple, Amazon, Facebook, Google, and Tesla. With all those extraordinary earning report, and the market still unable to close at a new closing high, and the bear is able to take control and take down the high and close near the low of the week. So you gotta give some credit to the bear for taking control of this market. And for that reason, I am looking for more downside to come in the near term. And this could be the intermediate top. So let's go and take a look at the sentiment and the internal to see what they are telling us. Looking at this sentiment chart, we see the VIX is moving back up and try to get to the 20 level, close the week at 18.61. But the extraordinary thing to know is the put-call ratio. You see that the put-call ratio is actually getting close to that 0.7 level. 0.75. It's sitting at 0.688. That means the market participant is taking less risks and is starting to buy more protection. So that's one thing that we are noticing is the little bit of a shift in market participant sentiment toward the bearish side, or a little bit of a risk off. And here, looking at the New York Stock Exchange up-down volume ratio, we see that on Thursday, with the S&P 500 closing at a new closing high, the up-down volume ratio was actually down. It was negative 1.03. That means there was more down volume than up volume on a record closing day. Then on Friday, it actually went down, and the up-down volume ratio was 2.6, minus 2.6. And also, even though the advanced decline was positive on Thursday, but it was only a modest advancing issue leading over the decliner by 191. And for a record closing day, it doesn't show much of a broad market participation. Then on Friday, we saw the weakness came back in, and there were 1,194 more declining issue than advancing issue. And looking at the new 52-week high versus the 52-week low, on Thursday there was actually 429 more new high than new low, but on Friday it shrunk back more than half, and it was only 185 more new high than new low. And looking at the New York Stock Exchange cumulative AD line, although the AD line did close at a new high on Thursday along with the S&P 500, but the flatness of this line is something to be concerning, because as the S&P 500 accelerated up, hardly much of a budge on the cumulative AD line, mainly because on Thursday there were only 191 more advancing issues than declining issues. And here, looking at the NASDAQ market, you can see the NASDAQ market put in a new high on Thursday, but unable to close at a closing high. And we saw that the up-down volume ratio was negative, and it was minus 1.8. And also on Friday, it was negative as well at minus 1.3. And throughout those days, on a record high day on Thursday, the advanced decline was actually negative on the NASDAQ. There were 370 more declining issue than advancing issue. Then on Friday, you can see once again the weakness came back in, and there were 1,547 more declining issues than advancing issues. And looking at the new high, new low, it's really haven't been much to talk about in the NASDAQ market. Although on Thursday, it was up at 217 more new high than new low, but on Friday, there was only 63. So I wouldn't be surprised next week we probably see some negative, in other words, more new low than new high. And there wasn't any improvement toward the resolving that negative divergence on the cumulative AD line in the NASDAQ. As you can see, it's just continued to retreat. So from the sentiment and the internals, they are telling us that the market participant is getting less risk on, being a little bit more cautious now. And also the internal continue to weakening. So right now, we basically have to be in a cautionary mode. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes. Now, looking at this S&P 500, the daily chart, we can see that the S&P 500 made a new high on Thursday. And that new high was sitting at somewhere around 4218.78. Remember, one of the levels that we're watching was this 141 extension of this bull flag major move. And it was sitting at 4221.89. So it got close, but no cigar. And it pulled back on Friday. And notice that the price action here on these 3 days, that's basically the battle between the bulls and the bear. Right? And they basically are more of a tug of war, and no winner, no loser. Then on after the close on Wednesday, we have Apple and Facebook reported, and that helped push the market up on the following day. Then on Thursday, on the close of Thursday, Amazon reported. But look what happened after Amazon reported extraordinary earnings. It actually closed down for the week on the S&P 500. So that got to be some tell to be on notice for, right? That something is not right. Something is different. Because as you could see that the bull took it up, and then the bear tried to push down on Thursday, unable to hold it down, and the bull was able to, regain control and push it back up and close near the upper portion of the range for the day. But then on Friday, the bear actually gapped it down, and it took it down throughout the entire session. But as you can see that, the battle is being fought right near this 127 extension, near the 4185 area between the bulls and the bear. So right now we are looking at the possibility now for the bear to remain to be in control and take this back down inside of this price channel. Right? Once it get back down inside this price channel, basically looking at this 100% major move at 4114 to see would it be able to get a bounce back up to this trend line, then probably get another push back down toward the 4020 the 4,020 level. And while this is coming back down, then we'd be looking for this thing to fill this gap. So that's basically the downside scenario that I will be keeping an eye on for the coming week. Now, if it does decide to reverse back up and give us this fake out, then I'll be looking for the 4221 to get taken out, move toward the 618, the 1618 level at 4275. And that would be the upside. But right now, I'm more leaning toward the downside. So we'll see. And looking at the daily chart of the NASDAQ 100, we see the NASDAQ 100 actually closed down for the week 83.65. Although on Thursday, it did make a new high, but was unable to close at a new closing high. The closing high was made on April the 16th, I believe. Yeah, April 16 at a level of 14,041.91. So we'll see that after the extraordinary earning from the FANG stock and the NASDAQ 100 was unable to close at a new closing high, is something to be said, right? And also you'll notice on Friday, this little inverted hammer doji candle, and that is not a good sign of strength. So again, just like the S&P 500, I'll be looking more on the downside than on the upside. So what is the upside possibility? The possibility is that it could come back up, regain control of this 14,013 and make its way up toward the 141 extension of this bull flag measure move at 14,167. But the downside is I expect it to come down, check this 13,713, essentially this 100% measure move. Then it will continue to come down and work its way back down toward this 13,280 near this pivot high here, and on the way down filling these gaps. Okay, so that's basically what I'll be watching for in the coming week for the NASDAQ 100 on the downside. For the Russell 2000, it finished the week with a loss of 5.5 points. Although it did try to come up on Thursday toward this upper channel trend line, but did not get up to that point, and then on Friday it just retreated. So right now we're basically looking for a continuation of a downside move for the Russell 2000 toward this 2195 area. But if it reverses back up, then we continue to watch this trend line on this upper trend line of the price channel and see would it be able to break above it and get back up to test the all-time high of 2360.20. Now the transportation, the Dow Jones Transportation had a good week. It finished up 213.57. So it definitely have a good week, and it's continued to trend up. And I wouldn't be surprised to continue to see the transportation to move up toward this upper price channel, at least get above this 15,500 and possibly get to this close to the 15,700 level. But if it is moving back down, then once again, I'd be looking at this 14,969 for potential support. As the Dow Jones Transportation showing strength, but definitely not for the Dow Jones Industrial. The Dow Jones Industrial failed to even get close to the all-time high. And right now, we're basically looking at the industrial to continue to pull back and possibly come down and fill this gap here and test this 33,000 level here for potential support. On the upside, if it could come back up, then we're basically looking for the all-time high to get tested. Now, with the Dow theory still in play, we do expect this Dow Jones Industrial to eventually come up and tag the all-time high and put in a new closing high. But when it will do that, no one knows. And how we're going to do that, no one knows. What I mean is, would it come down to this level before it come back up to make a new high? Or would it just continue to push up, surprise everyone next week and push up to a new high? Let me show you a couple of trade ideas that I'm kind of looking at for the coming week. The first one is Tesla. As you can see, Tesla reported earnings on Monday, and it did not react well. But on Friday, it did a little bit of a turnaround. So right now, I'm basically looking at this possibility. If Tesla could take out the Friday's high, which is somewhere around $715, then that might be a good trade location to see that it could maybe work up toward this trend line. And if it breaks this trend line, they'll be looking for it to move up toward this pivot high here, somewhere around, see what's that price level, around 780. So if I do set this up with some major move here, okay, so you're essentially looking at this 1.5 R, right, somewhere around 787. So if we could get back above this pivot high, so you essentially be risking one, making 1.5 or so, right? So that is one of the trade idea that I'm monitoring for the coming week. The other trade idea that I'm looking at is Caribbean cruise line. And here again, I'm basically looking forward to break out of this, break out above the high of last Friday's candle, which is 2801. And here's what I'm looking at as a potential R&R here. Let me put this up. Okay, so you can see that if it get up to these pivot high here, and that basically gives you a 1.5 reward to one risk, right? So and if it get up to this pivot high, then you basically get 2 to 1, okay, R&R. So that's basically what I'm looking at on Caribbean, because right now I'm basically watching that the possibility of this, this trend line here. Now it could, if it dip below the low of this Friday candle, then we could be looking at the possibility of coming back down here. Okay, so but right now I'm basically looking for the possibility of breaking out from the high of Friday and make its way back up to these test these pivot high up near the $29.72 or $30 level. Now, I do have a short idea, and that's for Beyond Meat, but Beyond Meat is scheduled to report earnings within the next couple of days. So I stay away from those that is, getting near earning, because anything is possible, right? It is so binary type of a trade when it gets close to earning. But just in case for those that are interested, you could be looking at this possibility of breaking below Friday's low. Right, then you could go, then that possibility is that it could work itself down to these low here, retest these low here. So let me put this, the possible R&R here. And as you can see, if it get down to these low, you essentially got 1.5 R to 1. So, but if it get above this high, Friday's high, and once again, all bets are off. So those are some of the trade ideas that I'm keeping an eye on. I do not have a position on any of them right now. And definitely I won't be putting a position on for Beyond Meat until after its earnings report. But for Caribbean Cruise Line, Tesla, I'll be watching those closely in the coming days. Thank you for watching, and be sure to smash that thumbs up to help me promote and share this video. Stay safe.